कहती मुझे जो काम करने की आईटी से
Hello everyone, another webinar. Please keep your mics on mute unless you are the speaker. I'll let Neha Chaudhari start now.
Thanks a lot, Darpan. Hi, everyone. Welcome to another edition of the Ikigai Law webinars. Thank you all very, very much for making time to be with us and listen to us talk about GST and e-commerce on a Friday evening. We bring you this session on GST and e-commerce in association with CA Club India. Thank you very much for your partnership. I'm delighted to welcome today our tax expert, Rajat Mittal. Rajat is a tax consultant with Ikigai Law, and he has over a decade of experience in handling extremely complicated tax transactions, focused on the e-commerce sector when it comes to GST in particular. In terms of how we're thinking of structuring the session today, Rajat, if I could request you to give us a brief overview of some of the key provisions and the law as it stands today and its intersection with the e-commerce sector, some of the business models that, some of the more common business models that we have. We dive into a discussion on a range of different issues. I have a whole host of questions that I'd like to get insight on registration, on TCS, on tax deduction at source, and how all of this interplays with the GST regime that we have today, and including some insight that you might have on the direction that the law and policy is likely to take. So that sounds like a good plan. I'm happy to hand over to you, and we can start with a short presentation.
Thanks, Neha. Good evening, everyone. I need to share my slides. Then comes the very fundamental aspect of value of supply. The value of supply under GST is the value on which the GST is payable. Say, for example, if your value of supply is 100 rupees and the rate of taxation is 18%, you pay 18% of 100 rupees. How do you determine the value is also very important. Under GST, value on which the GST is payable is called the transaction, and it is the price paid or payable for a supply. Now, coming to the broader theme of the today's discussion, e-commerce under GST. What is the concept of e-commerce under GST, and who is an electronic commerce operator? Electronic commerce under the GST is defined under section 2 clause 44 to mean the supply of goods or services or both, including digital products over digital or electronic network. An e-commerce operator means is a person who owns, operates or manages digital or electronic facility or platform or electronic commerce. Thus, if you see the definition of e-commerce and electronic commerce under GST, you would see that all sort of e-commerce players, whether it is the marketplace model of Amazon or Flipkart, who are facilitating supply actual of goods or services through their platform, are covered under GST. Similarly, the aggregator model of Uber and Ola, who are facilitating the supply of transportation services by individual drivers on their platform, those are covered. Even when Amazon or Flipkart supplies goods which are part of their inventory, even that is covered. And even if you're hosting your own website like Titan and supplying watches and jewels thereon, even those models are covered under GST. Now, when you're covered under the GST, what does it mean? It means that if you cross a particular threshold of the turnover, or maybe generally you might be required to obtain registration under GST. Ordinarily, who is the person who's liable for obtaining registration under GST? Every supplier to be is required to be registered under the GST in a state from where taxable supply of goods or services. Meaning, if I am making supplies from Delhi, I am required to be registered in Delhi, subject to obviously crossing the aggregate turnover limit in a financial year. As you can see, there is a turnover based exemption for suppliers under GST. If you are a supplier selling goods over below 40 lakh rupees, and if you are a supplier of services whose turnover is less than 20 lakh rupees, you are not required to obtain registration under GST. And aggregate turnover is to be calculated on pan India basis. There is certain category of taxpayers who are not required to obtain registration under GST. These are people who are engaged exclusively in the business of providing exempted goods or some services. That is the goods and services which do not attract tax. And if you are solely catering to those goods and services, then you are not required to obtain registration under GST. And agriculturist is not required to obtain registration under GST. And then there is a notified category which comes by way of notification. Say, for example, if your services are completely under reverse charge mechanism, for example, in case of legal services, you're not required to obtain registration under GST. The registration provisions under the GST have extraterritorial application, as you would see during the course of my presentation, that in certain cases, non-residents are liable to obtain GST registration. Then comes the most important part of GST registration, which is the compulsory registration. Section 24 of the CGST Act requires compulsory registration for certain specific kinds of dealers. Who are those dealers? Let us see. Any person who's making an interstate taxable supply. So if you're making supplies of goods or services interstate, say from Delhi to Bihar, Delhi to UP, in that case, you are compulsorily required to obtain GST registration. Then people who are required to pay tax subsection 5 of section 9. Who are these players? These are basic e-commerce operators like aggregators who are providing services on behalf of certain people, certain service providers who are required to obtain registration. Some of the examples include housekeeping services, uh, uh, transportation services, and hotel services like OYO, who are required to compulsory register under GST. Every person supplying online database information and database access or retrieval service from a place outside India to a person in India is also required to obtain GST registration. This would include uh, your Netflix, uh, Amazon, who are located abroad but are providing online information and database access retrieval service to Indians, unregistered customers in India would also require registration under GST. Then every electronic commerce operator is required to obtain GST registration. And similarly, a person who supplies goods or services through an electronic commerce operator is required to obtain GST registration compulsorily. Now, what is the impact of registration provisions? Like we've seen in case of e-commerce sector, it is both the e-commerce operator as well as the suppliers on the e-commerce platform who are required to obtain registration compulsorily. Now,
Rajat, this is I had a couple of questions for you on your previous slide before we get into the impact registration provisions, and maybe the answer to that could also lead us into the impact provision. If I understand correctly, is this a fairly recent development where we're asking e-commerce operators as well as the suppliers of these platforms to also register, or is that something that's been there in Indian GST law for a while? That's my first question. If you could give us a little bit of historical context to it. My second question is, how does this, especially for e-commerce operators, typically play out in practice? Do I have to go and obtain a separate registration in all of the states wherever my platform is available or wherever supplies are being made on my platform? And is there a sort of distinction to be drawn there? Because the platform itself may not necessarily
GST, e-commerce operators have really impacted their business, and they should be treated with them because they don't have to pay rentals and everything. Therefore, the compliance burden should be made on the e-commerce suppliers, people who are supplying over e-commerce platform. Secondly, the technical reason could be unlike a traditional small brick and mortar shop, which is operating within the confines of the boundaries of a particular state. Like if I have a shop in Delhi, I'm catering to the customers only in Delhi. Even if someone comes from outside Delhi, I am making a supply within the state of Delhi. Therefore, it's an intrastate supply. A supplier, typical supplier of e-commerce platform, not only does it supply within the state, but is also supplying to states outside. And GST law contains provision with respect which says that a person who's making interstate supplies are required to make compulsory registration. Now, why this particular provision was inserted of making people who are making interstate supplies to compulsory register is because there was a lot of pressure from the some certain state, because you have to understand that GST is a destination based consumption tax. Say for example, state largely consuming state, and before GST came into being, were denied the adequate part in the tax revenues, despite being huge consumers, were denied revenue. Therefore, they say that if someone is making sales from Delhi and the consumer is located abroad, then he has to pay GST of Bihar. So if I am situated in Delhi, I am required to discharge GST for the state of Bihar. Therefore, I am also required to obtain registration. These are the reasons why GST registration is made compulsory for e-commerce suppliers, and that is
sure.
also
Is this registration then, do I have to register with necessarily, or is there some kind of a centralized system option that's available that would make my life easier if I were an e-commerce platform? Because considering I especially don't have a physical presence in many of these states in which I may operate. So is that line of thinking factored into the way you're seeing the way the law is structured, and how it plays out in practice?
as of now, there is no provision under the GST law which gives a centralized registration. A centralized registration was always there under tax, uh, as also under the central excise law. GST registration, even though is based on the PAN of an individual supplier or a company, you are required to obtain separate registration in all the states. I'm not saying that every e-commerce operator is required to obtain in all the 29 states, but wherever you are making taxable supplies, you are required to obtain registration, because ultimately you will be required to deposit the tax with respect to that particular state, and that you can't do without having registration in that state. So even if you have a main place of your business in Delhi and you're operating from Delhi and you don't have a physical presence in the state of Bihar or state of Madhya Pradesh, but you're making taxable supplies in the state of Madhya Pradesh, for discharging the tax of the state of Madhya Pradesh, you are required to obtain registration in the state of Madhya Pradesh.
Great. We have one question that's coming to that. Uh, Pratik wants to know if there's any exception to compulsory registration. He says that Uber and Ola drivers, for example, are not liable to register, even though they are being a supplier supplying.
Yes, very good question. Uber and Ola drivers. So GST law makes a categorical distinction between two categories of e-commerce operators. One is the simply marketplace model such as Amazon and Flipkart, which supplies the services and goods of multiple suppliers having different brand names. Uber and Ola is a typical category which is notified under Section 9(5) of the Central Goods Act. What they say is that it is an aggregator model where Uber and Ola are providing services at Uber and Ola. The individual drivers are, even though independent contractors of Uber and Ola, but Uber and Ola stands in the shoes of a service provider. So even if you see the invoice of Ola and Uber, it is always Ola's invoice or an Uber's invoice. Therefore, in those cases, Ola and Uber are required to obtain registration and discharge tax on behalf of the drivers, and the drivers are not exempted from making payment of tax. Therefore, they're not required to obtain registration.
Other than this, are there threshold-based exceptions? For example, maybe in the e-commerce sort of marketplace scenario, um, to my mind, there's some kind of a threshold, like right, like a 20 lakh turnover or something of the sort.
Yes,
If
Neha.
I'm a small supplier, yeah.
Yeah, in case of small suppliers, small businesses with a turnover threshold of 40 lakhs, in a traditional sense of the term, you're not required to obtain registration under the GST if you're supplying goods. And if you are a supplier of services, the turnover threshold is fixed at 20 lakh rupees. However, if the exemption is lost the moment you make an online sale.
So what is the rationale for that? Because considering earlier in something that you said earlier in your introduction sort of stuck with me, and you said that was the point that you were making about ensuring that there's equitability in a tax statute, and that should be one of the underlying considerations of the
Absolutely.
way a tax law is structured and it operates. And one of the consistent sort of criticisms that you at least read about in the media stuff that we hear from some of our clients is that there is a little bit of a disproportionate burden on an e-commerce operator. So would that be a correct assessment? Would you agree or disagree with that assessment?
I would absolutely agree with you on Neha on this. There is no parity in GST with respect to how traditional businesses are treated and how suppliers over e-commerce platform are treated. E-commerce suppliers over e-commerce platforms are mandatorily, irrespective of the threshold, are mandatorily required to obtain registration, whereas traditional small brick and mortar establishments are not required to obtain registration. And like I answered previously, and this is, I think the answer lies in the fact that traditional brick and mortar shops, make businesses and supplies goods and services within the one bound particular state, and suppliers over e-commerce platforms make interstate supplies. And because there was a pressure from the states which are economically backward to have certain revenue, the provisions with respect to compulsory registration of e-commerce platform who were making interstate supplies was incorporated into the GST law.
That answers my question. I'll let you move on if you want to.
Okay. Now, what is the impact of registration provisions? Like we've discussed, there is no parity with respect to the traditional shops as well as suppliers over the e-commerce platform, which increases the compliance burden on such suppliers. Now, in case a supplier is doing both online and offline business, exemption is lost on supply. Therefore, this drives away the small sellers from online marketplace. And in my view, the benefit of threshold should be extended to support to suppliers on e-commerce platform. Uh, and if your concern is basically to address the problem of evasion, I would say when supplies are made through e-commerce platforms, they're required to be disclosed. So there is little scope for evasion of tax. Now the question comes with respect to place of registration. Like I said, registration under GST is based on a PAN. However, registration is required to be obtained in every different states wherever you're making taxable supplies from. Thus, if a dealer is making interstate taxable supplies from different states, he'll be required to take registration in all the states from wherever he's making taxable supplies. Now, registration provisions under GST leads to a very peculiar situation in case of e-commerce operator. Normally, an e-commerce operator having a primary place of business from where they operate but are not physically present in other states. Even though their platform is used for making taxable supplies in other states, now question arises whether in such a case, e-commerce operator would be required to obtain registration in all other states where it is not physically present, but the platform is being used for providing goods or services. GST Council has clarified that registration is mandatory in each state from wherever the taxable supply is being made. Secondly, all the domestic e-commerce operators can obtain registration by declaring their principal place of business as an additional place of business under GST. Thirdly, all the foreign economic operators who don't have a physical presence in India can appoint an agent and obtain registration. Now, I come to on the concept of composition levy. We've discussed that there are certain beneficial provisions under the GST law with respect to small tax players. We've discussed with respect to registration. Similarly, in respect of small tax payers having a turnover threshold of only up to 1.5 crores in case of supply of goods and rupees 50 lakhs in case of supply of services, they may opt for a composition scheme. What is the composition scheme? The composition scheme is nothing that you don't pay tax on every supply, but at the end of the at the end of the year, you pay 1% tax on the overall turnover. And in case of supply of services, applicable rate is 6% of the turnover. This reduces the compliance burden. You don't have to file periodic returns, but the overall compliance burden reduces significantly if you pay under composition levy. However, the benefit of composition levy is not extended to an supplier over an e-commerce platform. Similarly, it is also not extended to a non-resident taxable person uh, providing, say, OIDAR services such as Netflix and Amazon, the smaller players in those categories. Therefore, the beneficial provisions with respect to small scale businesses are not extended to suppliers on e-commerce platform. We've discussed the
What
concept
is
of,
the rationale? Sorry, Rajat.
yeah, yes, Neha.
I interrupted you. What is the rationale for that, would you say? If you could go back to suppliers of goods and services supply goods or services through e-commerce operators are essentially exempt. So are we talking about now sellers on marketplaces of the sort that we have very many in India? Is are we talking about this benefit not being available to those suppliers of goods or services? Am I
Absolutely,
understanding that
Neha.
correct? And
Absolutely. Any supplier, even though on an e-commerce platform, even though your turnover is less than 1.5 crores or 50 lakhs in case of services, but if you are making sales over an e-commerce platform, you're required, the benefit of composition levy is absolutely not extended to you.
and what would you say is the rationale for doing this?
The rationale is basically the benefit of composition levy is never extended to a supplier who's making interstate supplies, and a supplier over an e-commerce platform doesn't operate within the confines of a boundary of a particular state. The supplies are made largely across India. Therefore, the benefit of
Okay, so then my follow-up question is, why is that? My follow-up question is why have that, right? Because this seems to be a bit of a recurring theme that's emerging from this entire conversation that we've had. If I am supplying, whenever there's an element of interstate supply involved, it seems to me that if I were a seller that was indulging in any kind of interstate supply, then I'm not going to be entirely happy with the way this law um, is treating me. So I'm just trying to understand what is the underlying reason for something like this, and whether having some kind of a blanket provision of this sort even sort of makes sense. Then what is the sort of second order effect of something like this? Are you disincentivizing people from uh, operating or conducting business on some of these larger sort of e-commerce platforms? Are you disincentivizing interstate supply? Do you want me to then be limited and supply, locally, things like that?
so Neha, government has never articulated any reason. The reason has never been articulated under any law or by way of any clarification. However, like I said, I previously said, there was a lot of pressure from the uh, traditional small scale biz shops that e-commerce sector has really impacted them. So therefore, that could be one reason which played its part. Obviously, if you see from the legal perspective, I don't see any rationale why the benefit of say composition levy or should not be available to a small e-commerce supplier. It should be extendable. But the other technical reason could be that e-commerce supplier, since it makes supplies interstate, and the revenue in case of interstate supplies accrues to certain backward states who are largely consuming states, say Bihar, even though they don't have a physical presence of businesses operating, but they do have a large consumer base. So they want to get the tax share. So the moment you start making interstate supplies, it creates the tax accrues to a state from not from where the supplies are being made, but the state from where the consumption is being made. Therefore, in those cases, the moment you make an interstate supply, the benefit of whether it is composition levy, whether it is the registration, all these benefits are taken away from you.
Are we likely to see any kind of amendments to this? Is there any kind of talk of extending some
There
of
are there GST Council is cognizant of the issues. I know for a fact that certain e-commerce platform, because in a way it instead of incentivizing suppliers to supply goods over the e-commerce platform, it acts in a way to disincentivize them
yeah.
to supplies. So there have been representations which are being made to GST Council over the issue, but as of now, we don't have any clarity as to whether this will be amended anytime soon.
Thanks, Rajat.
Now I come to the important concept of person liable to GST. Like I discussed, the liability of payment of GST arises on a person who's making the supply. And there are two exceptions to this. One is if your supplies is under reverse charge, like legal services, then you're not required to pay GST. It will be the recipient who would required to pay GST. There is a third category of person who are notified under section 9(5) of the CGST Act as a person liable to pay GST on behalf of the actual supplier of goods or services. The tax, I will read out section 9(5). It says the government may, on the recommendation of the council by notification, specify categories of services the tax on intrastate supplies of which shall be paid by the electronic commerce operator, if such services are supplied through it, and all the provisions of this act shall apply to such electronic commerce operator as if the supplier is liable to pay the tax in relation to the supply of such services. Therefore, specifically in case of an e-commerce sector operator, there is a category carved out who are required to discharge tax on behalf of the supplier of goods or services. And notification 17 by 2017 lists who are these, what are these services. These services are services by way of transportation of passengers by radio taxi, motor cab, maxi cab, and motorcycle. Then there are services by way of providing accommodation in hotels, say for example, OYO. Then there are services by way of housekeeping such as plumbing, carpentering, etc. Now, what is the rationale behind having such a provision under the GST, where, say, for example, Uber and Ola are being made to pay tax on actual drivers of who are providing the transportation services? There are twofold reasons for it. One is Uber and Ola, they're aggregator models where the services are provided under a single brand name of Uber and Ola. Therefore, the government is of the view that Uber and Ola represents themselves as a service provider. Therefore, for all practical purposes, they are the service providers, and thus they should be made to discharge GST on behalf of the drivers, who, even though are not employees of Uber and Ola, are only independent contractors, but Uber and Ola are made to pay tax on their behalf. The second reason is obviously some of these drivers, etc., have a turnover below the threshold of 20 lakh rupees. Therefore, the revenue augmentation by taxing and tapping these services through the aggregators is also one of the reasons why Uber and Ola are made to pay tax. There is a very interesting case on this, and a recent one wherein Authority for Advanced Ruling in the case of Humble Mobile Solutions was faced with an issue where an applicant operated an e-commerce platform named DriveU, which provided the drivers on demand to the customers. Now, drivers offering services through the platform were individuals and independent service providers. The mode of transportation was chosen by the customers themselves. The question before the Authority for Advanced Ruling arose whether the applicant, that is the e-commerce platform, was required to pay GST on behalf of the drivers in respect of the services provided by the drivers in terms of Section 9(5) of the CGST Act. The Authority for Advanced Ruling said the drivers are not providing services in their vehicles, but are only driving the vehicles of the customers. Therefore, they're not providing the services of transportation of passengers by a radio taxi or a motor cab. Therefore, the Section 9(5) will not apply. In that case, the platform was not liable to pay tax on behalf of the drivers. However, they said that they're required to discharge tax collection at source, which I will come later during the course of my presentation. Now, we've seen that in every e-commerce transaction, basically there are three parties. One is the seller or supplier, then there is a customer, and then there is a e-commerce operator. Then there are, apart from the three kinds of suppliers, there are two types of transactions. One is between the seller and a buyer, which is supply of goods or services. Then between the seller and the marketplace service or an e-commerce operator. Now, GST shall be levied on both the transaction. Between it will be levied on the goods or services. Between the seller and an e-commerce operator, it will be levied on the commission value or other charges earmarked by an electronic commerce operator for providing the market platform to the supplier. Now we come to the most important and the most controversial, provision under the GST with respect to the e-commerce sector, which is the concept of tax collection at source. What is tax collection at source? Tax collection at source under GST means the tax collected by an e-commerce operator from the consideration received by it on behalf of the supplier of goods or services who makes supplies through operators' online platform. Therefore, if I am a supplier over an e-commerce platform and my consideration is being collected, say by Amazon, then Amazon India is required to collect while transferring the, say for example, if 100 rupees is the total value of the supplies and Amazon collects 100 rupees on behalf of the supplier of services or goods from the customer, then Amazon would be required to deduct a 1% tax collection at source on behalf of the supplier and deposit it with the government. The current notified rate is 1%. And it is interesting to note that it says the provision says every electronic commerce operator who is not an agent. I will come to this as to which electronic commerce operator is not an agent and who are exempted from the category of the e-commerce operators who are not required to deduct tax at source. The value on which tax collection at source is required to be deducted is basically the net value of taxable supplies. Therefore, if I am making a supply of say rupees 100 over the e-commerce platform, then e-commerce platform would be required to deduct tax at the rate of 1% on the value of 100 rupees and deposit it on my behalf with the government. Now, there are certain situations where I make supplies over e-commerce platform, but a lot of supplies are actually returned back to me. Then the provision says it will be the net value of taxable supplies. So if I supplied goods worth rupees 100 and goods worth rupees 500 have been returned back to me, in that case, the net value of taxable supplies through the e-commerce operator is only 500 rupees. In that case, e-commerce operator would be required to deduct tax collection at source at only rupees 500 and not 1000 rupees. The tax collected at source by e-commerce operator is required to be deposited by 10th day of the month next month while filing a statement in GSTR 8. And this amount which I collect on behalf of the supplier and deposit with the government would be reflected as a credit in the electronic cash ledger of the supplier. And when the supplier discharges his ultimate tax liability, he can offset his part of the liability through the tax collection at source, which I have deposited on behalf of such supplier. Now, the question, there is a lot of conundrum under the GST law with respect to whether the tax is liable to be deducted. So I have incorporated a very graphical slide, if you can see that which answers the question if you are liable to collect TCS under GST. Now the first question that you need to ask, do you own, operate or manage an e-commerce platform? If no, obviously there is no liability to deduct TDS. Second question that you should ask is whether the e-commerce platform acts as an agent or it acts as a e-commerce platform. If it acts as an agent, then there is obviously no liability to deduct TDS as is provided under section 52 of the CGST in CGST Act. My next slide will discuss what is the difference between when does an e-commerce platform act as an agent. The next question that you should ask is whether the suppliers make taxable supplies through an e-commerce platform. So TCS is liable to be deducted only if you are making a taxable supply. So if you are making an exempt supply, say for example, if you are making, if you are supplying vegetables who are exempt from GST, in that case, that e-commerce platform will not be required to deduct TCS on the consideration received by the supplier. Now, second question that you should ask is whether the consideration is collected by you on behalf of the supplier. Say in a marketplace model, it is always the case that Amazons of the world or will collect consideration on behalf of the supplier. Then the next question that you should ask is if your services are covered under the category of transportation, hotel accommodation, and housekeeping. Barring these three services, all e-commerce platform suppliers, operators are required to deduct TCS. Now,
I have a couple of questions, if I may.
yes, Neha.
If you could go back to the previous slide. This these categories of transportation, hotel accommodation,
Yes.
it's a little bit of a recurring theme, right? In one of the in the earlier point that we were talking about, also we see these three categories sort of coming together and bundled together. Certain my sense, and like please correct me if I'm wrong, is that there is you're carving out these categories and you're applying the GST law sort of differently to these categories of organizations as opposed to some of the others. So, correct? Does the law sort of apply equally to these business models and some others, and some others that we see? Second, and maybe this is a little bit of a follow-up question. This actually goes to one of the earlier slides that you had screened, where there was this little matrix where you had 4 different kinds of e-commerce. The 4 different scenarios in which what could essentially e-commerce look like, right? 4 different models of it.
Yes, Neha. Yes.
I'm particularly curious if I sort of own and operate my own website. Does that, you said one of the things that you had said earlier was that that could also be the definition of e-commerce wide enough to encompass that to also be within the definition of e-commerce. So how does that play out in a scenario of tax collection at source? And third, again, keeping with my theme of the larger sort of bigger picture questions that I've been leading you to, there's been a lot of criticism that I've read in the press. This is something, TCS is something that a lot of industry bodies, including the Internet and Mobile Association of India, have consistently sort of pushed back against and said that this is really good for the industry. Why are you placing this sort of unfair burden, undue burden? So is there I think this speaks a little bit to my first question as well. So is there some kind of differential application of of the way TCS is well applied and how it plays out.
Sure, Neha. To answer your first question, uh, I have we've discussed in the previous slides that there is a section 9(5) of the CGST Act, which in a way uh, puts certain e-commerce operators on a different footing from the others. And I would say there's a basically a differentiation between a typical marketplace model where you are catering to multiple suppliers having multiple brands, and the typical aggregator supplier where the services are being performed only through a particular under aegis of a particular brand. Therefore, in case of a aggregator model, what they have carved out, they've carved out three specific categories. One is with respect to transportation, say in the case of Uber and Ola. Secondly, in case of say hotel accommodation, say for example Oyo. Thirdly, in case of housekeeping services. Now, the primary reason for this is the twofold. One, uh, and TCS doesn't apply to them, is the primary reason is that in these aggregator models, the services are provided by, and the platforms provide services in their own names, or at least they represent themselves to be the actual service providers, even though the services are being performed by the drivers, but the platforms uh, represent that the services are being provided by, say, Uber or an Ola. Therefore, the government says you represent yourself as the service provider. Therefore, service tax would be discharged on by you completely. Now, when the service GST is completely discharged by them instead of the drivers on the platform, there is no reason why they will deduct TCS on such services, because in respect of those services, tax has already been collected by these three operators. And the second reason for this could be the revenue augmentation. One has to see that some of the services which are covered are being provided by drivers and small hotel accommodations or housekeeping services such as carpenters and plumbers, who are not from the economic strata of the society, who have turnover over and above the threshold of 20 lakh rupees. Therefore, they are outside the GST ambit. Therefore, government says now you are catering to those service providers. What I will do is I will I can't go to them. I can't ask them to get registered under GST and make them pay tax. Therefore, I will ask you to step into their shoes and pay tax on their behalf. Therefore, there is a clear distinction between these two kinds of e-commerce operators. One model where on behalf of the suppliers who are more sophisticated and are using the platform for providing the services, the e-commerce operators are required to deduct TCS. And in these three cases where the entire tax liability is being put on these aggregators. Coming to the second question, which you asked, and I will take you back to the first slide. Uh, if I'm hosting my own website, whether I would be required to deduct TCS? See, the provision TCS says that if a supplier makes a supply, if an e-commerce supplier facilitates a supply or provides a platform to the other supplier, to a third person, in that case I would be required to discharge TCS on behalf of such supplier. But if I am, say, Titan, and I have my own website, and I have I on that website I sell uh, watches and jewels, in that case I would be discharging my own GST liability myself. Therefore, the question of collection at source does not arise in those cases. Neha, can you come with what was your third question?
I think you also answered that. Rajat, could you go on mute while speaking? There's a little bit of an echo. Yeah. I think the third question you answered when giving the answer in giving the answer to the first one, but I'll come back to it. Is what's been the reason for this this very vociferous criticism that we've seen against tax collection at source from a whole range of industry associations. I've particularly seen the Internet and Mobile Association of India put out press statements, ask for the rollback of tax collection at source as well. So it seems to be, and very many e-commerce companies and platforms are a member of IMEI. So I'm just trying to get a sense of what the impact of this is on the industry and why this is something, of course, that they're particularly worried about. That's my first question. Then we have another question on chat from Aditi, where she wants to understand how is
Can I
cash.
answer your? I'll take your second question subsequently. Can I answer this question? First question.
Sure, absolutely. Yeah.
Neha, basically, the criticism for TCS, emanates from the fact the moment you start say that you are required to deduct TCS on behalf of certain suppliers, what you do is you increase the compliance burden enormously on on a e-commerce platform, because there might be not one but lakhs and thousands of suppliers over the e-commerce platform. Therefore, you would be required to pay and collect tax collection on behalf of these multiple number of suppliers. Not only that, the problem doesn't end. You are required to file a statement with the GST authorities, which is called GSTR 8, on which you would require to declare the amount of tax that you have paid on their behalf. And this particular amount needs to be matched with the ultimate tax liability of the supplier. Now, if there is a case of a mismatch, it it opens a Pandora's box of compliances and ensuring that because GST law is largely tech based, and if there is a slight mismatch of even one, a single rupee, in that case, what happens is, you can't file the returns of the subsequent period and all. So it leads to a lot of problems. Therefore, there is a lot of pressure from the industry to do away with TCS provision, and it should be done away with, in my opinion, because GST law mandates that whosoever is making supplies through an e-commerce platform, you are required to disclose the names of the suppliers. So if I'm making a, disclose that, these are the suppliers on my platform and these are the worth of goods or services they've supplied over a period of time, there is no case for made evasion made out. The government already knows who are the suppliers who are making, how much taxable supply is. Therefore, I don't see a reason why TCS is a good provision, apart from the fact that it only adds to tax collection and source. A lot of compliance burdens on an e-commerce platform. What is your second question, Neha?
The second question we have from Aditi. She sent a question on chat. She wants to understand how is cash on delivery taken care of under the TCS GST regime? What happens when there is any return or cancellation?
Okay. So in case where there is a cash on delivery, the amount is collected by the e-commerce platform on behalf of the supplier. It is not a supplier who goes and delivers. Therefore, it is always the agent of an e-commerce platform who collects the amount. Therefore, even if there is a cash on delivery over the for a goods which are being supplied for on e-commerce platform, in that case also there is a liability to discharge TCS by the e-commerce platform in respect of that particular supply.
Great, Rajat, I'll let you. I'm also a little fairly time, and we have 7 minutes to 6. So if you want to move on.
Yeah. Now I will broadly discuss, some of the important issues which are concerning tax collection at source. First is the provision says that tax collection of at source liability is on the e-commerce platform who is not an agent. Now, who are these e-commerce platforms who are not an agent? Frankly speaking, even I have not been able to answer this question, and GST law nowhere by way of no notification or a circular has clarified as to what is the difference between e-commerce platform and an agent. If you see the definition of an agent under GST, it says agent means a person including a factor, broker, commission agent, aratia, delegated agent, an auctioneer, or any other mercantile agent by whatever name called, who carries on the business of supply or receipt of goods or services on behalf of the another. So technically, every e-commerce operator supplies goods or services on behalf of a third supplier. In that case, every electronic commerce operator is technically an agent. Does that mean there is an exemption to these electronic commerce operator uh, from discharging the liability of TCS? This is an open question. Now, the another issue that a lot of time arises is if I am an e-commerce platform without having a physical presence in India, but I am operating from outside India, but I have certain suppliers who are supplying certain services and goods within India. Do I have to discharge TCS? The GST Council has said, yes, you have to discharge TCS on such supplies. Now, how do you enforce this? GST law has mandated that all the foreign e-commerce operators who are required to deduct tax at source should be registered in India. If they don't have, if they have a physical presence, then you register at the physical presence. If you don't, then you register it through your agent and discharge your TCS liability. Another issue which comes is whether the tax collections at source is required to be collected on exempt supplies. The provision clearly says that it applies only to taxable supplies. Therefore, if you are supplying goods which are exempt from GST, the e-commerce operator will not collect tax collection at source on your behalf. Other important issue is whether tax collections at source is to be collected in respect of the supplies made by the composition taxpayers. No. The answer is, as per section 10(2) of the CGST Act, a composition taxpayer cannot make supplies through an e-commerce platform. Therefore, the question of collection of TCS does not arise. Whether the tax collection at source is to be collected on import of goods or services or both? No, if you are importing goods, the liability of GST is under the Customs Act as opposed to the Integrated Goods and Service Tax Act. Therefore, the TCS provision will not apply in such a case. And lastly, one of the important aspect is the tax collection at source has to be deposited in cash. You cannot use your input tax credit to deposit tax on behalf of the supplier on your platform. The other important issues with respect to tax collections at source are it is very, I think this was one of the questions that was also asked. It is very common that the customers of an e-commerce company's return goods, how these sales returns are going to be adjusted. Like I said, the tax collection at source is applied on net taxable value, which means that if you supply goods say worth rupees 100 on your platform and goods worth rupees 50 have been returned back to you, the tax collection at source by the e-commerce operator should be on 100 minus 50. How can these suppliers claim credit of the tax collection at source? So if I am an e-commerce operator, I deduct TCS on behalf of the supplier. The TCS that I collect and discharge with the government on behalf of the supplier would automatically be available as a credit in the electronic cash ledger of such supplier. And when the supplier is discharging his GST liability, he can utilize the tax credit which is available in his cash ledger and offset his tax liability with that tax collection at source which I have deposited on behalf of such supplier. Failure to collect TCS would attract interest as well as penalty. Now I would come to the last part of my presentation, which is a question, which is value of supply. We've already discussed that the value of supply is basically the transaction value. Therefore, GST is to be paid on the transaction value, which is defined to mean the price paid or payable in respect of a particular supplies. What are the ingredients of this transaction value? All the incidental expenses charged by the supplier in respect of a particular supply will be included in the value. Then comes a very important aspect in respect of GST law only, that subsidies directly linked to the price are also to be incorporated in the value. Now, taking an example, now if I am a farmer, I get a I get a subsidy from the government for production of fertilizers. Say ordinarily my cost for production of those fertilizers say was 1,000 rupees, and if I get a subsidy worth rupees 500 from the government, then what is the rate, what is the value on which I will GST discharge GST? The value on which I will discharge GST would not be 500 rupees, but it will be 1,000 rupees. Even though 500 rupees is what I get from the customers, the GST law says the subsidies that you have got, not only obviously in this case the exception is that if you're getting the subsidy from the government, you're not required to include it, but if you get a subsidy from a third party, you are required to include it in the value. Now this is very important from the concept of from the perspective of e-commerce operators, because a lot of times we've seen that the suppliers over e-commerce platforms supply is say for 100 rupees, but uh, the supplier gets 100 rupees, but it is the e-commerce platform who are subsidizing those supplies. Say in case of big billion sales or Flipkart or Amazon, where the prices are reduced by 60%, 50%. Who's funding those supplies? If those supplies are being indirectly subsidized by the e-commerce operators, then you are required to include the value of that subsidy on the in the value and discharge GST. Say for example, Cloudtail is one of the most big platforms who supply certain goods on Amazon. If the supply of Cloudtail is say for example worth rupees 100, but they're actually charging only 80 rupees, because 20 rupees is the discount which is offered by the e-commerce uh, operator like Amazon to Cloudtail. In that case, even though the customer has only paid you 80 rupees, you are required to discharge GST on 100 rupees. Now, there are certain issues with respect to valuation, some of which I've already discussed. First two I've already discussed. Uh, Some suppliers on e-commerce platforms offer cashback to customers on purchase of certain goods. Whether such cashbacks are to be treated as discount under GST? Okay, so if say the value of my supply is 100 rupees and I give a discount, if the supplier gives a discount of say 20 rupees, a trade discount of 20 rupees, then the GST is obviously required to be just discharged on 80 rupees and not 100 rupees. But if there is a cashback from an electronic commerce operator or by the supplier himself, you would require to see whether the cashback, what is the accounting treatment of the cashback, whether the cashback is treated as an expense in the books, or whether your sale price is considered as a net of cashback. If it is considered as a net of cashback in your books of account, then obviously it lends the character of a discount. But if it is treated as an expense in your books of accounts, then cashback will form the part of the value. Some of the other important issues. Yes, Neha.
Yeah, Rajat, so in the interest of time, I was wondering if we could focus a little bit on the most exciting thing that I see there is the big billion sale. That could be something that I'd love to get more
Yeah,
of
yeah.
your thoughts on, and this new business of the equalization levy and how it sort of plays in with the GST. Um, if we could focus on two of these
Sure,
issues.
sure. All right, Neha. Uh, like I explained, in case of big billion sales made through the Flipkart or Amazon's, it is under the scanner of GST department. The reason why it's under the scanner of GST department is because some of these sales are being made at a predatory prices of below normal market price, say less by 50% or 60%, in some cases even 80%. What the government says is that the e-commerce platforms such as Amazon and Flipkart are indirectly funding the suppliers on the platform in giving these discounts. Therefore, these are typically subsidy given by Amazons and Flipkarts of the world to the suppliers. Therefore, this should be included in the value. Right now, what the information that I have is that they discharge GST only on the discounted value, but the tax department is after them to include the value of the subsidies that they've given to the suppliers to be included in the value. Now, coming to the most, the recent concept of equalization levy, which has, you know, recently been introduced with effect from April 1st. Now, if you see under GST, there is a uh, provision which says that all taxes and duties which are levied within the law of India will form part of the value. Therefore, if a foreign e-commerce platform is being charged equalization levy, that will form part of the value and GST would be payable. But there is a way out of this, because if you see the provision of equalization levy under the Income Tax Act, Finance Act 2020, it says they shall be charged an equalization levy at the rate of 2% of the amount of consideration received or receivable by an e-commerce operator from e-commerce supplies. Now, consideration under GST always presupposes quid pro quo, and consideration means if I am supplying, uh, I get something. I If I'm supplying, I get something in return, which will be a consideration. Now, typically in an e-commerce platform, it is not the e-commerce platform that is required to, uh, you know, who is supplying, but it is only merely a collection agent. Therefore, the amount that an e-commerce operator gets from the supplies effected on its platform is not in the nature of a consideration. Therefore, the equalization levy may not apply in certain transaction. If it doesn't apply in certain transaction, obviously the value of GST, value on the GST would be calculated, would not include equalization levy. In the end, I have just incorporated a slide just to explain how would an e-commerce transaction look like on a e-commerce platform. Now, say for example, if there is a a e-commerce operator providing certain services to customers located everywhere, and the booking amount on the app is, say for example, ₹100. Now the amount of ₹100 is chargeable from the customer, and this amount is inclusive of GST. Now there are two discounts which are offered on the app. One is so the total discount which is offered on the app is, say, ₹20. The customer doesn't know the working of this particular discount, but the customer ends up paying only ₹80. Now we know that this 10% of the discount is given by the e-commerce operator on its own, and 10% of the discount is given by the vendor. What I wanted to illustrate was, when you discharge tax collection at source on behalf of the supplier, the total value of supply would be not ₹80, but would be include the 10% discount given by the e-commerce operator. Therefore, if the supply is, say for example, ₹100, customer pays ₹80, 10% is the discount given by the supplier. Obviously that will be deducted because it is a discount. The 10% discount given by the e-commerce operator would be in the nature of subsidy and would be included in the value of the supply. Therefore, tax collection at source would be on ₹90 as opposed to ₹80, as many would think. That is it, Neha. Any questions from uh, audience? I'd be happy to address them.
Yeah, I think the couple that did. But I'd just like to get your closing thoughts, Rajat, before we wrap up. We're about 10 minutes over time, on where you think what do you think is next for GST law and some all of these issues that we're talking about? Because I don't think there was a single issue that we discussed today that was simple, that was non-contentious, that didn't have sort of different interests trying to push for different positions of the law. Have we seen any chatter, murmurs coming in from the GST Council on any amendments on how we might see this law evolving? Will COVID have any impact you see on some of the issues that we've discussed? If we could just get your closing thoughts, maybe if we could do that in 2 or 3 minutes, and we can wrap
Sure,
up with
Neha.
that.
where do we go from here, Neha? I would uh, firstly, I would say that I would want to see some kind of rationalization under the law in terms of bringing parity with the traditional brick and mortar establishment and the e-commerce players. The beneficial provisions which are given under GST law for small businesses, I think, should be extended to suppliers over the e-commerce platforms as well. And there are some of the changes that are required to be done. Uh, one aspect that I see needs to be really addressed is, and I know for a fact some of the e-commerce players and the banks have also advocated it before the GST Council, is that there should be a centralized registration scheme as was available under the service tax and excise law in respect of, say, e-commerce operators, so that they are operating within the confines of a state, but if they are making supplies across the boundaries of India, they can, this will completely ease the compliance burden on them. Uh, the second is obviously some of these small suppliers over the e-commerce platform should be treated at par with the physical shops, and the beneficial provisions with respect to composition levy, threshold exemption should be given to them. And thirdly, what I would want to see is completely doing away with the provisions with respect to tax collection at source, because when an e-commerce platform already is required to disclose in a statement all these e-commerce supplies made by uh, all kinds of suppliers, irrespective of the threshold, with the GST department, I don't think there is a case for evasion which is made out. Therefore, the provisions with respect to tax collection at source should be completely done away with. It will significantly reduce uh, the compliance burden on e-commerce operators. Uh, GST Council, number of representations have gone to GST Council, but as of now, no significant step has been taken in this direction. Hopefully, after COVID, I think the government is also cognizant of the issue that the economy really needs a boost, and e-commerce sector is one of the sectors in economy which, if the compliance and GST, provisions are rationalized, can really help in boosting the economy. Therefore, I think that will be a step in the right direction. But as of now, we have not seen any movement from GST Council on these issues.
Maybe I will remain optimistic about the future and how this shapes up, Rajat. Thank you so very much for a very enlightening very enlightening conversation, for really helping us understand, diving deep into all of these issues that we have been reading about in the press. A lot of our clients have been grappling with some of these issues as well. So this has been a very fascinating discussion for me. And thank you very much to all of our participants for making time on a Friday evening and being a part of this session with us today. A special thanks to our partners for this session, CA Club India. And I am also thanking Neeti and Hitesh, who have been tuned in on the YouTube live stream. We'll be back with 4 more webinars next week. We're discussing building an outer space. We're talking about the operator venture capitalist. We're talking about the art of strategic litigation tech sector, and we're wrapping up on Friday with discussing implications for data in international trade law. Registration details are on our social media platform, so we'd love to see you next week as well. Thank you everyone, and have a great weekend. Thank you, Raja. Thanks.
Thank you. Thank you, Neha.
Bye.
Bye.